Between the Rows podcast is brought to you by Glacier FarmMedia and sponsored by FCC Ag Expert.
Hey, do you know what's new and improved? Ag Expert software.
What's that?
Ag Expert? It's field and accounting software designed for Canadian agriculture.
No, that's Sparkle Sound.
When I say Ag Expert?
Yeah, that.
Well, Ag Expert Field helps you manage your farm. And Ag Expert Accounting is the accounting software in Canadian agriculture. But it's so new and improved, it still has that sparkle to it.
Mm-hmm. Can I use it on my phone?
Of course, it's built for modern agriculture. Try it for free at agexpert.ca.
Welcome to Between the Rows, where you get to hear the stories behind the stories in Canada's leading farm publications.
Hi, I'm Robert Arnason of the Western Producer. Welcome to another edition of Between the Rows. First up on today's show, independent hog producers in Western Canada are sick and tired of low prices. They say the current system, where the price of pigs is based on the American price, is completely broken. If the pricing structure isn't changed, independent producers will continue to leave the business, and the hog industry on the prairies could look very different in a few years. Joining us to explain the situation is Ed White, a reporter with the Western Producer in Winnipeg. I spoke with Ed at Assiniboine Park in Winnipeg. Hey Ed, thanks for coming on the show.
Thanks for having me on.
So can you give us an overview of the pricing problem in Canada's pork industry? Why are some producers frustrated?
Well, I think you said it right there when you phrased it as some producers, because this really doesn't affect most producers in Quebec, where they have a new pricing system that mostly reflects the cutout value, the wholesale pork value of the pigs, and that is not so terrible these days. And so producers there are doing okay, but in Western Canada, the prices are mostly set off U.S. futures, discounted to Canada, and those futures these days reflect a glutted U.S. system where there's too many pigs and outstripping demand by a lot. So that sends the signal, produce less pigs and ship us less pigs. But the problem is, in Western Canada, there are not enough pigs going to the slaughter plants, and the signal through the price should be saying, grow more pigs and ship them to us. But that pricing signal, the main thing our farmer sees to take his lead from is broken, completely broken. And it is not reflecting the situation of the Canadian packing industry, not having enough hogs and finding great demand out there, especially coming from China.
So just let's get back to this cutout value. So can you explain that a little further? That means that the value that the pork processor receives for the carcass of the pork, or what does that mean exactly?
Yeah, it's how they estimate that if you take a live pig, you slaughter it, you cut it up into various pieces, and then you sell those pieces. It's an estimate of what the packers are getting for a pig, but in a cut up form. So it reflects in an approximate way what the pork is worth. So the pig comes in as a live thing at one price, but it goes out at often a totally different set of prices, and you put all those prices together for the different cuts from hams and bellies. You get basically a wholesale pork price, and that's what the packers see, and farmers are very far right now from seeing that same kind of value.
So as you said, in Quebec, producers there are getting a share of that cutout value, but in Western Canada, in the most cases, not.
Yeah, there are cutout values factored into some of these very complicated formulas, and the formulas are not easy things to understand or explain, but some of them have some element of the cutout value included in them. And then, of course, pigs are on different kinds of contracts where the prices are set by different factors and different elements. And some are from systems that are vertically integrated, and really it's not at all the same for them. If you're producing the pig and then you're slaughtering it yourself and processing it yourself and marketing it yourself, this is a different factor. But for those independent producers and a lot of the Hutterite operations, they're very reliant on these different formulas, and right now quite a few of those formulas are just not working.
So let's just talk about that in terms of not working. So Alberta Pork, some of the other provincial associations published a report kind of looking at the finances and the economics of hog production right now in Western Canada. Can you just sort of provide a snapshot of what that report said?
Well, yeah, they saw, I mean, there's a basic phenomenon of sometimes, a farmer in Quebec can be getting $100 a head more than a Western Canadian farmer for, a similar pig. And they just see chronically discounting of live pig prices to the cutout value as being the problem, and that it isn't just a volatile situation where sometimes farmers make out like bandits and other times the packers are raking it in and it just is volatile and goes back and forth. They've calculated over a decade period, looking at various formulas from various packers, that basically farmers are more often than not in a loss position, and over the long run they are they're not breaking even, they're making a loss over the long run, and they're losing hundreds of thousands over periods on their equity, and that just doesn't support even maintaining your barns, let alone rebuilding them and replacing them or expanding, which our industry needs because the packers need more pigs.
So just on that note, as you know, there's hundreds of pig barns in Western Canada that are 20 years old, 25 years old. They're at the kind of end of their lifespan. So what happens if these barns aren't replaced in the next few years? What does that mean for the industry?
Well, what industry is going to be left if all the independents, if a lot of there's reports that some of the Hutterite operations are getting out of pig production, at least for now. Well, that's pretty severe because they are some of the last people you would expect to throw in the towel. And with these plants already under capacity, what happens if that becomes chronic, if it gets worse? And will we see the loss, a set of dominoes falling where, chronic undercapacity means somebody closes a plant somewhere and then the industry shrinks a bit more and a bit more. This should be the place that you can produce pigs at a world-leading cost of production, or at least a world-leading quality plus a very good competitive cost of production. But somehow to a farmer, they're not seeing that. It's not coming across to them.
So basically what we need here is an actual price signal to independent producers, say there's a reason for you to invest, to build a new barn, because going forward there will be a return on that investment. That's kind of what's needed.
Yeah, they need to see that to believe it's worth going out and taking the risk of borrowing millions of dollars to build something new. And I think their bankers, who really can give the go-ahead or the thumbs down, need to see that as well. And without that, it's hard to see how this industry even maintains itself at its present size.
Last question. Are you hopeful that the industry can figure this out, that there will be some changes to make it viable for independent hog producers?
I would say you look at a ration and you think, well, I don't know, it looks pretty bad. But on the other hand, the packers have been willing to talk about this. Some have been given, bonuses or premiums, however you want to phrase it, during the pandemic. Others are willing to look at longer term solutions. They don't seem to have slammed the door or denied the problem. So do things tend to get worked out in the end? Yeah, although I think there's kind of a deadline coming up, and you and I were discussing this the other day, that a lot of barns need a lot of replacing soon because of some of the open housing for gestating sows issue, which is coming close by. So before people put down a lot of money and lay a lot of concrete, I think this has got to get worked out.
Okay. Thanks, Ed. That was Ed White, a reporter with the Western Producer in Winnipeg. He spoke about the pricing problems in Canada's hog sector. Thanks, Ed.
Thanks, Robert.
Cheers.
Bye.
Next up, in the last few weeks, politicians and TV news anchors have been talking a lot about Hutterite colonies on the prairies. Such attention is rarely a good thing, and this situation is no different. New cases of COVID-19 continue to pop up on colonies, and some believe the case numbers could get much higher. Karen Briere, a reporter with the Western Producer, has been following COVID-19 and what's been happening in Hutterite colonies in Saskatchewan. She joins us from Regina. Hey Karen, thanks for coming on the podcast. Appreciate it.
Hi, Robert.
So there's been a lot of attention, as you know, on Hutterite colonies and COVID-19. So as of July 28th, what's the status of cases on Hutterite colonies in Saskatchewan?
Well, the numbers didn't change much today, although we've had a solid week of double-digit increases. And the government, in its daily news release, there were 9 new cases today, they didn't specify if any of them were on colonies. So by my math, there were at least 172 cases on colonies as of yesterday, and the government has said that more than 20 have reported infections.
Okay, so 20. Can you just clarify that? So 20 reported infections. So I mean 20 different colonies. You mean?
20 different colonies.
Okay.
Have had and actually Saskatchewan recorded its largest number of 60 positive cases in a single day, and that was July 22nd. And at that time, they said 48 of those were attributed to colonies, and 43 of the 48 were on a single colony at Hodgeville.
Okay. So as of now, are quite a few of those colonies on lockdown, or what's happening at those colonies?
There are none that are officially locked down by the government. The Premier's been asked many times if he would do that, and he has not said he would. Many have taken matters into their own hands, even when the pandemic first started, and they implemented stricter limits on who could leave the colony and who could be on the colony. Although some have instituted their own lockdowns. For example, the Rosetown colony began prohibiting travel to other Hutterite communities a few weeks ago, and then last week locked themselves down further. Okay. And most of them have signs at the end of their road saying no entry and that sort of thing. Okay.
So backing up a bit, is there a real understanding of how this all got started? Was there an original case of travel or something in Saskatchewan? What happened?
Well, we don't really know. There's been a lot of speculation about attendance at a funeral in Alberta earlier this spring after 3 girls drowned.
Yep.
And it was believed that Hutterites from all 3 prairie provinces attended that funeral, so that would be a large number. And some government officials have linked the funeral to the outbreak and others haven't, so it's really hard to tell. And I know that Hutterite leaders have said they don't know for sure that that's where it started. And then another said to me, well, the virus is all over the world, so who knows how it arrived on colonies. But it's pretty easy to see how it could spread given how they live in close quarters and eat together and so on.
And I guess on colonies, are they restricting some gathering places? Obviously in the rest of society, churches haven't been open for a long time. Are they changing some of their behaviors on colony? What have you heard about that?
It sounds like some of them are. That I've heard of a colony that, they were sort of worshiping in smaller groups at a time instead of all together, and eating at different times to sort of limit the numbers. But there's no way really of knowing that they're all doing that. The Premier here said yesterday that public health is going to be visiting every colony in the province over the next week or so to see how they're doing, offer testing and that sort of thing, but also to make sure they are in compliance with gathering size limits.
So obviously the Hutterite colonies are getting a lot of unwanted attention. For example, there was an article in the Globe and Mail today. Hutterites normally don't get national media coverage. How is this playing out in the media in Saskatchewan?
Well, I would say that we're all covering it. We're all using the numbers and information supplied by the government. And some Hutterite leaders are not very happy about that. They say they're being shunned on the streets or shut out of stores and blamed for spreading the virus, even though it does seem that the vast majority of colonies don't have cases. If you consider, I believe we have about 60 colonies in Saskatchewan, so that would be about a third of them that have the virus. And I think it's just hard for them. They're used to doing their thing, their farms and their businesses, and going to farmers markets and that sort of thing. And this is not something they're used to dealing with. The Huttarian Safety Council has been pretty proactive throughout this and urging them to take precautions and isolate themselves and that sort of thing. So you'd like to think they're doing their best.
So there's a public reaction in person when, say, a member of a colony goes to a local gas station or hardware store, but then there's also social media. What's the conversation like on social media about all this?
Well, as you know, social media can be a pretty harsh place, and it's not always clear what's true and what isn't. There are lots of comments in support of Hutterites, noting their contributions to agriculture and communities and feeding people through their farmers market sales and things like that. But there are others who are claiming that they've seen Hutterites in communities, in large numbers, not following physical distancing guidelines and those sorts of things. There's a fair bit of back and forth about discrimination, and a lot of questions from both sides about why the Saskatchewan government chose to publicize that the increasing numbers we've seen are due largely to outbreaks in colonies, because then they're all facing the stigma, regardless of whether their colony has positive cases or not.
So, what would be the other option? If their government's not going to say that it's Hutterite colonies, how would they possibly describe what's happening or to protect the larger population?
Mm-hmm. Well, initially, when the first cases started to signal an outbreak, it was described as communal living situations, and then a list of some affected rural municipalities was released. And if you plotted the colonies on a map in those municipalities, it was pretty clear that communal living meant Hutterites. And so at one point, I guess somebody just decided, let's just say it's on Hutterite colonies.
Right.
And the government rationale for doing that is they say that it's different than other situations because of how they live, right? So that affects how transmission occurs and puts the outbreak into context. If it's on a colony as opposed to your little community, you might not be as worried, even though you're supposed to still be taking precautions.
Right. Last question here. So COVID-19 has, largely been a threat or a huge problem in large cities, places like New York or in northern Italy and other parts of the world. Has this, now that it's kind of arrived in rural Saskatchewan, has it changed a little bit how rural people view this disease?
Well, it's a little bit hard to know because I haven't been out and about too much.
Yeah.
I think many Hutterites were taking it seriously from the start, but they're like others in society. They have their individual opinions about things and proceed accordingly. It's kind of like some people wear masks out in public all the time now and others never do, right? So I guess we'll kind of see how this progresses. It's difficult to know if they're taking it more seriously as a whole. I'm certain that there are individuals and individual colonies that are.
Okay. Thanks, Karen. That was Karen Briere, a reporter with the Western Producer in Regina. Thanks for coming on the show.
You're welcome.
Next up, the 2019-2020 crop year comes to a close July 31st. The trade battle between China and the U.S. had a massive influence on commodity prices, but other factors also played a role over the last 12 months. Here to talk about what happened is Bruce Burnett, Director of Markets and Weather Information with Glacier Markets Farm. Hi, Bruce.
Hello.
Thanks for coming on Between the Rows. So when you look back, what are some of the highlights of this last crop year? What sticks out for you?
Well, I think there are a couple of them. First of all, I guess you would call it more a low light than a highlight, was the just horrendous harvest conditions we had across the prairies this year during the fall, and that obviously influenced all sorts of things. It limited our ability to export in the first few months of the crop year, as well as certainly caused quality issues for not only cereal crops but also for canola. So that's certainly probably the low light of the year. In terms of recent events, certainly the Chinese trade war with the U.S. has the attention of most of the commodity markets, but what I'm most focused on right now is the really strong demand that we're seeing here in Canada, and the record or near record exports that we're seeing over the past couple of quarters here now. So again, some of this is related to rail capacity, but also it just indicates that there's strong demand for our grains and oilseeds and pulse crops around the globe right now.
So that's been a really, I guess, bright light, or maybe it's a bit of a surprise, I suppose.
Yeah, certainly it is interesting as to how much the grain and transportation system has ramped up here. Of course, what has happened for the railways is that other commodities, with the possible exception of maybe coal and forest products, have really dropped off, and so that's given them the ability to move a lot of grain. And certainly since we saw the eastern St. Lawrence system open up, we've seen just some very, very strong exports out of both sides of the country. So that's, I think, a welcome surprise here. I think the good news is that might be one of the highlights of the 2020-21 growing season or marketing year, because I think this is probably going to continue well into the fall in terms of the strong shipping. Okay.
So let's just shift gears to this, what's going on this summer. So I've been noticing that the loonie has been climbing over the last, I guess, maybe a couple months. We're now around 75 cents US. What factors are pushing it higher, and do you have a sense of where this is headed?
Well, I think the one factor that has been an overriding influence on the loonie is actually nothing in Canada itself, but just the performance of the U.S. dollar. U.S. dollar has just recently hit 2-year lows when you look at the dollar index, which is a trade-weighted index, and it appears as if it's even going to go lower. It's currently trading in this 94.93 point range, but we could see it move down, possibly challenging the 90 point mark, which is essentially the low that was set just a bit over 2 years ago. So in the light of that, the loonie will obviously gather some strength. Most of this, I think, is related to the U.S. economy and the fact that the COVID crisis has certainly hurt them more than it has other countries, including Europe, most of Europe, most of Asia, as well as in Canada. Although we've seen an uptick in cases, we've managed to contain it reasonably well where our economy is restarting. So I think that we're going to see a stronger loonie here as we go along. And initially, when I was in the start of the pandemic, when we saw oil prices headed down, I guess on the futures, essentially the negative values early on, but those prices have come up, they've stabilized. They still need to move higher for the Canadian economy to pick up, right. Certainly here out west. But I think from an economic point of view, Canada looks to be a little bit better off right now, as well as some of the other areas. So I think that's basically something to keep an eye on here. I don't think we can go too much higher than sort of the 78 cent area, but certainly these are unprecedented times, and it'll depend a lot on how these economies restart here.
Okay. Maybe we can just talk briefly about canola futures. So there's been a bit of an uptick in July. Is that just because of what you talked about earlier about just strong demand for Canadian grains and oilseeds right now, or is there some other things going on here?
Well, again, I think it's strong demand for canola. We're seeing very, very strong shipments. Our export numbers are going to end up a lot larger than last year's number. And I think basically that is due to two factors. First of all, we're seeing strong demand from Europe, which has been, I wouldn't say much of, not necessarily a surprise, but certainly it appears to be something that has helped compensate for the drop-off in Chinese shipments. And again, I think right now the market moving upwards is looking at two factors. Vegetable oil stocks around the globe are getting tighter, and that's obviously helping support oil prices, so that increases the canola price. The second thing is that in China specifically, canola oil prices have been moving sharply higher here in the past 2-3 weeks. So that will definitely lead to some speculation here that we're going to see increased demand for raw canola seed or canola oil, one or the other. But at the end of the day, that works out to better canola values, at least anyway, globally here. So I think the combination of both those things is helping boost canola here. And we should, again, expect it probably to continue upwards with a brief pause here as we get into the harvest season. It looks like we have a good canola crop. So I think there will be some harvest pressure here, but after that, it looks like demand's going to remain pretty strong here going through the first couple of quarters of next crop year.
Okay, I have one more for you. So I was looking at the wheat future values in the U.S., and normally the Minneapolis futures are traded at a premium to Chicago wheat and Kansas City wheat, but right now Chicago futures for some reason are higher than Minneapolis. Can you speculate or explain what's going on there?
Well, a little bit of this is about the market dynamics of the futures market. The most liquid wheat futures market is Chicago, and it tends to be traded on a little bit more global fundamentals than necessarily the domestic U.S. situation per se, whereas certainly in Kansas City and Minneapolis, those are more domestically oriented contracts in terms of the trading volumes and interest. So what has happened is, as we've seen the Russian crop come in here at harvest, and early on, at least anyway, it was a bit disappointing. So that caused the Chicago wheat to move upwards. European production has been down, so European grain prices have been moving upwards. So all of those factors have pulled Chicago upwards. At the same time, you've had better growing conditions for the spring wheat crop, and certainly we've seen harvest pressure from the hard red winter crop. So that has kept those two contracts, the Kansas City and Minneapolis contracts, from moving up with Chicago here. It is interesting in the earlier on in June, when the U.S. spring wheat crop was very dry and people were getting very worried about it before these rains that we've had. Minneapolis wheat was trading at about a 40-cent premium to Chicago in the September contract. But that has certainly moved quickly the other way here. The one thing I think the farmers should pay attention to maybe a little bit is that this does not necessarily mean that spring wheat is worth less than soft red winter wheat from Chicago. Export values are still higher for the higher protein wheats, so the basis levels sort of have compensated a little bit for this.
Okay. But it's still, it is unusual for this to happen. Like, have you seen this happen in the past?
It has happened briefly in the past, mostly when there's been strong demand for soft red winter wheat in the U.S. from an export point of view. Well, we're seeing very modest demand externally for soft red winter wheat, but it has traded at a discount. Again, I would say maybe for a month or two, but never for a long period in time. The normal premium between Chicago and Minneapolis is somewhere between a 45 and 65 cent premium, depending, over history.
Yep.
And certainly at times over the past couple of years or 3 years, we've seen premiums where Minneapolis is at a $2 or $1.50 or a $2 per bushel premium. So these things move around. Right now, it's certainly being influenced more by the good growing conditions for spring wheat in North America in general here, I think,
Okay.
Which is leading to this discount.
All right. Thanks, Bruce. I've been speaking with Bruce Burnett, Director of Markets and Weather Information with Glacier Markets Farm. Thanks for coming on the show, Bruce.
Thank you.
That's it for today's show, the last one for the 2019-2020 crop year. I'm Robert Arnason of the Western Producer. Thanks for listening.
Between the Rows podcast is brought to you by Glacier FarmMedia and sponsored by FCC Ag Expert, Canada's #1 field and accounting software. Try it for free at agexpert.ca.
Hey, do you know what's new and improved? Ag Expert software.
What's that?
Ag Expert? It's field and accounting software designed for Canadian agriculture.
No, that's sparkle sound.
When I say Ag Expert?
Yeah, that.
Well, Ag Expert Field helps you manage your farm. And Ag Expert Accounting is the accounting software in Canadian agriculture. But it's so new and improved, it still has that sparkle to it.
Mm-hmm. Can I use it on my phone?
Of course, it's built for modern agriculture. Try it for free at agexpert.ca.